Hello and welcome to the Crypto Jungle, your source for no-nonsense crypto fundamental analysis and technical analysis. And in today's video, we're going to take a look at the big players. We're going to take a look at Bitcoin. Have we bottomed? Is there potential for a bounce? We are kind of ahead of schedule if we have printed our low, so we'll kind of dive into that a little bit. And then we'll take a look at the altcoins, because the altcoins are... they're eager to get going. We've had a lot of blood in the streets. We've had a large shakeout, very large drawdown. Is it done though? That is yet to be seen. So without any further ado, let's jump in to the king of all crypto, and that is Bitcoin. Starting out with Bitcoin here on the weekly, basically we have just closed a candle body close below the weekly EMA. Or below the weekly moving average, rather, which is not a very good sign. Not a very good sign. Not only that, but this downtrend was treacherous downtrend. And it's kind of ahead of schedule when compared to other cycles. If you tuned into the last stream, we talked about kind of the time parameters. Avert your eyes. My God, what a blinding chart. How can you even look at light mode? Jesus. But basically, the cycle is about 200 weekly bars, about 200 weeks, give or take, and usually that's 150 weeks of bull and 50 weeks of bear. We're not quite at that 50-week mark, so are we going to chop around a bit? That is yet to be seen. We could do some comparisons to the previous cycles. What I don't like is the fact that we closed so cleanly below the 200. Now, when you're trading and investing, it's important for you to follow through with the trading plans as they appear. So part of the plan was, as soon as we get a weekly green diamond, I buy. We got a weekly green diamond, I bought. It's phase one of a multi-step plan in purchasing at the beginning of a potential turn. What the green diamond represents is just very, very bearish sentiment, very oversold conditions, and that's not hard. You can use other metrics as well to kind of draw your own conclusions that, hey, the market's bearish. No shit. So we're in very oversold conditions. Not seeing a ton that's showing me the potential for a bounce just yet. Now, a few noteworthy things right here. Let me actually get my pen tool going here. So these volume signatures, we've seen a few high volume signature events here. Now, typically when you have a high volume event in the context of a capitulation, you'll get an uptrend, consolidation and then an uptrend. So do we get something like this, a consolidation right here? Do we have to chop sideways? It's highly likely that we get some sort of consolidation if the bullish narrative is the bottom is in. If the bottom is in, we'll probably trade sideways for a bit. But what's unique about these signatures here, let me just erase this. What's unique about these volume signatures is, yes, they're high volume, but these moves were not violent. Now, you may think, what are you talking about? We've dropped so much. Yes, we've dropped a lot, but it's kind of the way that things drop for me. Like, this was full-blown capitulation. Like, we fell and we fell hard. Yes, we've dropped in price significantly, but we did so in a very slow way. So for me, it's kind of interesting. It's not what I've typically categorized as capitulation. Capitulation, it. Like, there's no arguing. When you capitulate, it's just everybody gives up at the same time. You get cascading liquidation events, and you have a very large move that happens in the span of a few hours, not during a week. It takes a few hours, boom, we've capitulated. And we haven't seen that. So does that mean that there's more coming? It's hard to say. Let's go down to some smaller time frames here, and let's take a look at kind of the smaller analysis, the shorter time frame analysis here. Oops, don't need that pen tool there. And I want to talk about just the local trend in this downtrend here. So we've been trapped under this 7 EMA. Basically, every time we get above it, we get a rejection. So this is kind of the local pattern. This is the local trend. When you're on the daily chart, what this represents is the weekly average price. So price every single day, the price closes at a price that is lower than the weekly average. And then you get a few pops above, where you get a few days above the weekly average, and then it's met with a rejection and price continues to stay below the weekly average price. So that trend will continue. We are below the weekly average price currently. So the assumption is that we will stay below the weekly average price. So what we need to see to correct that is we need a candle body close above the 7 EMA. If we can get a candle body close above the 7 EMA, that's showing early signs of a repair. But we're just not getting those clear signals just yet. If we go down to the very small time frames, let's go down to the hourly here. What we're looking for is kind of an overtaking of the levels. And this is where the altcoins kind of stand out opposed to Bitcoin. So we'll get into that in just a moment. But basically, you can see this area of this breakdown, this large breakdown candle right here. This is obviously indicating that there's a level of support there that was lost. So when you see those types of moves, go and capture that move. Go and take a look at that move. Let's make this a little bit of a brighter color here. What do we want? What do we want? Yellow? Do we want yellow? What do we want? Let's go with, what am I feeling like? Playing with the colors again. Always playing with the colors. All right, let's drag that out. And we can see this kind of support range. So here is where it's a little bit interesting. So Bitcoin, we have not overtaken this level. We have not come above and made it on top of it. We have not reclaimed this level at around 20,500. So until we can get above that level and stay above it, print some higher time frame candles, maybe some 4 hours or something above that level, we have not reclaimed it yet. If we take a look at the RSI, we can see confluence, nothing really divergent in the RSI. But yeah, let's go ahead and take a look at Ethereum, because Ethereum's in a little bit of a different position. So Ethereum here on the daily chart, we're a little bit closer to our EMA, but when we go down to the hourly, we do have a reclaim of that level. So same level. Here's the area of the breakdown. Make note of the breakdown. Let's put a level at the breakdown, and you can see that we've reclaimed that level. We touched it here, barely held support. I would just ignore this area, kind of held it as support, lost the level, got back on top of the level, clean retest of that level, and we're beginning to trend up. So the altcoins want to move. Now, what this is, indicative of what this typically means is retail hasn't given up yet. So we will have to see if retail is able to pick up the pieces and go. I guess, because we had 3-digit Ethereum, a lot of people got really excited to, pick up ETH at 3 digits. So there could just be this demand of just, holy shit, we haven't seen Ethereum this low. I want to pick some up while it's 3 digits. There's that psychological level or that psychological urge at 3-digit Ethereum. But yeah, it's performing better than Bitcoin on the lower time frames. We are claiming levels better than Bitcoin on the lower time frames. If we go ahead and take a look at Bitcoin dominance, we can see that as well. You can see the retracement in Bitcoin dominance. When this chart is going down, it means that the altcoins are performing better than Bitcoin. So as long, and this is alt season, by the way. This is what alt season looks like. It's just red candle after red candle after red candle, free fall in Bitcoin dominance. That is an altcoin season. When we are ranging, you are not in altcoin season. So with this downtrend right here, we've been seeing an outperformance of the alts comparatively to Bitcoin, but that is slowing down and it is resting on top of a support level. So do we rally off of this level? We'll have to see. Sitting at that level of support. It could come down a little bit lower, potentially, maybe down to this level. So, you know, we could continue to see performance out of the altcoins, but I really don't think we're out of the woods yet. Now let's go back to Bitcoin on the macro timeframes, and I want to really paint a picture here of what can be expected. Now, we have been on a very, very relentless downtrend, and I'm watching this in other groups. I'm watching it in my own group. Everybody's like, oh, when do we buy? When do we buy? When do we buy? When do we buy? Calm down. Calm down. You are not in a bull market, okay? In a bull market, you buy the dip and you got to be there. You got to be there to buy the dip. You got to be ready to deploy your capital, because once the dip is gone, it's gone. That is not the environment. That is not the environment. We are going to drop to a level where we're going to stay put for several months. Potentially, you know, if we go back to this cycle, so in the event that this is our capitulatory move, which I'm still hesitant to declare that it is, you know, we would be looking at this area right here, similar to what we saw in the 2018-2019 capitulation back here. So it was near the end of the year. So there could be some more downside, but let's say that this is the move. Let's say that we've landed near the 200 and we closed at the 200. We did close below on this cycle, but on the cycle that we're looking here in 2018, we closed at the 200. So let's say that's the move. You have about 16 weeks for the market to prove that it can trade sideways. It'll go up, it'll go down. I mean, this candle right here represents a 23% move. I'm sure a lot of people felt a lot of FOMO and a lot of people got into positions at that candle, but it was not necessary. It was not necessary. We didn't get our golden candle here. This appears if you have the Alpha Numerics indicator, links below if you want to get access to this indicator. But we got this golden candle here, indicating the bull market has, you know, this is an investor signal giving you the flash that momentum has entered. That was followed up with a bullish cross. You don't need to peg the absolute bottom. It's very risky for you to get into those practices where you're trying to nail the bottom, because you're trying to catch a falling knife. You're going against the trend. It's better to just wait for things to calm down, lay flat for a little bit, and at least wait for price to be able to hold support on top of the 7 EMA on the weekly chart. So look at this. You know, when we first got above the 7 EMA, there was a large move. We had a big move. It got corrected back down. Then we had 1, 2, 3, 4, 5 weeks. 5 weeks staying on top of the 7 EMA. You don't need to rush into position. You really, really don't. I can't stress enough the lack of urgency for you to be deploying capital right now. You are not in a buy the dip, shit's gonna moon tomorrow scenario. You're in an accumulation, let's repair the trend. You are in a repair the trend scenario. You're not in a buy the dip scenario. Very, very different. Very important for you to understand the differences there. When you're in an uptrend, when you're in a bull market, yeah, you fucking buy the dip because you're not going to get a better price. But when you're in a downtrend, you don't DCA into downtrends. You don't try and buy the dip into downtrends. You wait for the trend to show signs of a repair. So if we're to follow this sort of multi-month accumulation here, where we had 5 weeks on top of the 7 EMA, where do we stand today? Well, we're well below the 7 EMA. We are well below the 7 EMA. If you're trading short term and you're closing positions, if you're day trading, this isn't really for you. I'm not really talking to you. But if you're somebody who's like, I'm a Bitcoin investor and I want to know where to buy, when to buy and when to sell, you got to just chill out, man. You've got a lot of time. You've got a lot of time. And in the big picture, you're not going to see an all-time high for years. So you've got a lot of time, a lot of time. And if history is to repeat itself, even when we come off of the EMA, we're going to come back down to it a year from now. So you'll get another chance a year from now. We're entering a bear market. I mean, we're entering the flat part of the bear market. We've been in the downtrend part of the bear market. Now it's time to go into accumulation. Accumulation takes years. Not days, not weeks, not hours. Like, not trying to nail the bottom here. Just please calm down, people. Calm down. You know, your emotional desire to watch price advance doesn't justify you being glued to the charts 24/7, you know, trying to nail the bottom. Don't try and nail the bottom. You've got so much fucking time. So much time. All right. So, you know, we need to get above the 70 EMA. The EMA is pointed straight down. We have a ton of momentum to the downside. Much momentum to the downside. We are very oversold. So some of us who are trading the green diamond have taken a probe position, taken a little bit of a position at the green diamond. And that's about it. You know, the next position comes at the bullish cross, and we have, judging by this chart, judging by the weekly chart, we have weeks. We have weeks before we can even entertain the idea of getting a bullish cross. If we take a look at the daily, which is where that signal comes from, we're still below the 70 EMA. 70 EMA is really far from the 30 and the 50. It's going to take weeks. It's going to take weeks. Weeks. Long time. Did I say it's going to take weeks? Did I say that this is going to take a long time to play out? Did I say that, you know, you should calm down and not try to, you know, trade every single candle every single day? Because if I didn't make that clear, I want to make that abundantly clear. You got time. All right, let's catch up with the chat here. I stopped watching the hot ASMR girls when Baloo comes on for some alpha. That's your Twitch feed, ASMR girls, and then Baloo. Well, you know what? That is one of the highest honors I think you can get in Twitch. So, thank you, sir. Much appreciated. I don't know what to say. You know, I just want to thank my family. I want to thank you know, all the people around me that help make this a reality. You know, I want to thank God and everybody. It's quite an honor. Thank you very much. All right, let's catch up with the YouTube chat. What up, Omi? What's going on? Can you share your thoughts on Link when time permits? Yes, we can. Let's take a look at Link. Now, you know, going back to, you know, the whole thing, we'll take a look at it, but it's the same story, more or less, no matter what chart you look at. So we took a look at Ethereum. Ethereum is kind of, you know, outperforming Bitcoin in the short term, especially in the context of Bitcoin dominance coming down. Now we're in kind of the area for bounce potential on Bitcoin dominance, so we'll have to monitor that. But let's take a look at Link regardless. Chainlink. Now, is Chainlink going to be the coin that sparks off the bull market? It was the coin that got the bull market going last time. It was the first to rally. It was the first to run. And then after that, it did nothing. It did nothing for like the whole bull market. It was like we had an entire bull market after Link stopped pumping, and it just consolidated and did nothing for a very long time. But it was the first one. Its all-time high came in May of 2021. So it was the first to move, and it was the first to fall. But yeah, we're looking at this consolidation right here. So I would just keep it simple. I don't like, so here's something to observe, okay? And this is for kind of the pattern traders and the triangle creators out there. When you are looking at a downtrend and like you have reached a level that we got a rejection at. So here's kind of the secondary touch. And then we come down again and we fail to touch it. And then we come down again and we get even further away, and we come down again and we get even further away. It's not showing demand. There's very little to no demand for Chainlink out there. I know that Chainlink is fundamentally quite an important project as it feeds price data to DeFi. But there may be a day where price data won't need to be fed to DeFi. If the central bank digital currencies are rolled out and they're actually dollars, not derivatives of dollars, Chainlink will have a lot less of a purpose in DeFi, because its primary use right now is to feed price data so that the algorithmic stablecoins can trade at an appropriate peg. Now, as soon as you introduce physically backed dollars into the ecosystem, they don't need to maintain peg because they are what they are. They're dollars. There's other applications of Chainlink as well, so it's not like we don't need anything. But as far as price feed data, if we have dollars in DeFi, if we have real dollars in DeFi, the role that Chainlink plays in DeFi is significantly less than the role it plays today. That being said, you know, what we're expecting, and this goes back to the Wyckoff price cycle. This is the simplest charts. If you guys aren't already in the Discord, I pinned it in the chat. Come into the Discord, and then open up the resources tab, and you're going to see a channel called diagrams. I cannot stress how important this really basic, simple chart is. This is the simplest way to approach a market cycle, a price cycle. This repeats time and time again. Okay, I've beaten this drum for a while. I've talked about this a lot on the channel, but that's because it's so simple. It's so simple, and it's so imperative for you to understand. This is how price cycles work. There's an accumulation zone where you trade sideways for months, if not years. Years are better. In fact, the longer you spend in the accumulation cycle, in the accumulation area, the higher the markup price. So looking for accumulations on 1 or 2 month, consolidations, yeah, there's a trade there, but it's not a bull market. It's not life-changing money. It's not that at all. A perfect example of a price advance in the context of a large accumulation, and is Tesla. People have changed their fucking lives with Tesla. What did Tesla do? Tesla did an incredible amount of accumulation. An incredible amount of accumulation. Look at how not only did we do an incredible amount of accumulation here, we did an incredible amount of reaccumulation down here. This is what you need to learn to identify in the markets. When you can see an asset that is trading sideways for like a decade, that is how you get life-changing money. That is how you put money on the table and boom, you're a millionaire. If you're looking for trades, that's something else. We can trade these ranges. You can pull 10, 15, 20% out of the market just fine. But if you're a value investor looking to purchase things for the long term, your bread and butter needs to be these accumulation ranges, which we have 0 accumulation ranges in crypto right now. 0. Which means 2 things. First of all, we need to start accumulation. And B, the accumulation is going to take years if it's going to be worth our time. It's not going to be worth our time unless it trades sideways for years. A lot of people talking about, we're talking about the super cycle possibilities this year. No, you're not going to get a super cycle. You're not going to get a super cycle unless we trade sideways for a bear market that's more than 2 years. I think we kind of do an Amazon, and this is, not the most popular opinion, but I think we do an Amazon. And this is where we are today. So, this is a super cycle. This is generational, life-changing wealth. And where did it come from? It came from an 8-year accumulation range. An 8-year accumulation range. After 8 years of sideways nothing, came this meteoric global takeover of Amazon. And that's what I think is required for Bitcoin. Now, we've totally got sidetracked in terms of Chainlink, but the point I'm trying to make here, going back to the price cycle, is you need an accumulation area, of which we do not have any. There are 0 accumulations, okay? So it goes like this: accumulation, markup, aka bull market. Bull markets are where demand is greater than the available supply. Then people make life-changing money. They buy houses, they buy boats, they buy this, they buy that. They, whatever it is that they do, they take a cash position for the next cycle. What that causes is it causes distribution, because you have a very excited retail market that's wanting to buy all of the bullshit that all the whales and savvy investors bought in the accumulation area. That concludes the transition of shares from smart money to dumb money, from retail to investors, occurs in the distribution. What that causes is it creates a ton of supply entering the market, which saturates the market to the point where retail doesn't have enough money to prop it up anymore. So then you go into the markdown, where supply is greater than demand. Where are we in crypto right now? We are in markdown. We have more supply. We have more sellers willing to sell than we have buyers willing to buy. We don't have FOMO. It doesn't matter who you talk to on the streets. If you tell them to buy crypto, they'll tell you to go fuck yourself, because you just lose money in crypto. So you don't have demand. You don't have people behind you getting ready to buy these assets. So you have a markdown. Supply is greater than demand. Eventually the selling will stop. Eventually the selling will stop, and you'll have savvy investors coming back in. That point is called accumulation. And the cycle starts all over again. Accumulate, bull market, distribute, bear market, accumulate, bull market, distribute, bear market, accumulate, bull market, distribute, bear market. Time and time again, forever. It's happened forever, and it will continue forever. As long as there are publicly traded markets, this will continue. So wait for it. There's no, patience is the name of the game. If you're not an active trader, if you are not actively trading this market, which, 95% of traders lose money. Let's just throw that out there as a reminder. But if you're not actively trading this market, trying to take your 5% and run, or your 8%, your 7% and run, you're looking for the 100x, you're looking for the 20x, the 30x, the 40x, whatever. If you're looking for multiples on your portfolio by just buying and holding, we don't have any of that. We don't have any of that. Turn on log chart. Sure, who cares? Who cares about log chart? It's good for looking at, over time we go up. Look at log chart for what? It's still not showing an accumulation. This is markdown. Markdown. Okay, serious question. People keep saying now that Bitcoin dominance would break while alts shit during a bear market. What are the chances you see Bitcoin dominance actually reverse down and alts give opportunity for a rally while we find our bottom? It's highly unlikely. It's highly unlikely. What you're describing is something that hasn't happened in the past. Nothing is impossible, but when you start to entertain things that have never happened, it should be the absolute lowest of your analysis. It's just wishful thinking. It's hopeful thinking. If it happens, we can watch it and observe it. But again, going back to the price cycle, again, this is how it moves. This is how every market moves. It doesn't matter what you're in. It doesn't matter what you trade, what you invest in. This is how price moves. Period. End of story. You need accumulation. We have a market. We're coming off of a bull market where everybody made a bunch of money and got a bunch of new people who may have never invested in their lives coming in and putting money into the market. This is what happens next. They lose it all. They lose it all because the valuations go to basically zero. Then the smart people, the people who actually understand what they were buying in the first place, take their positions back. So the people take positions in accumulation because they know that it's, something that's going to have demand in the future because it's a high quality product that the world needs and will have demand for. Then they sell it to the people that don't understand. The people that don't understand hold it for them while they lose all of their money. And then they sell it back to the smart people during the accumulation ranges. So I really don't think that, you know, if you're counting on Bitcoin dominance falling out of this consolidation, I just don't see it. I really don't see it. I just don't think that we're at that point in the market cycle. It's highly unlikely. Now, what we could see is further consolidation here. And another thing to take note of is traditional finance. So we are kind of in that bounce area. If we take a look at the S&P, every time the S&P has come down to the mean of this channel, with the exception of these two very large shakeouts, this was the COVID shakeout, and this was the bottom of the 2008 financial crisis. So very big moves. We've come to the bottom of this channel, but for the most part, we kind of bounce off the middle of the channel. We bounced here, we bounced here, we bounced here, here, and we're sitting here right now. So we do have a little bit of a bounce potential. So what that could look like in crypto is highly correlated with the NASDAQ. We could rally here because this is a very large shakeout. So usually when things become oversold, you do get kind of a reactionary rally, especially if there is news or some sort of fundamental drivers with the Fed. Maybe the Fed, you know, starts lowering interest rates at a lower clip, or we get some sort of other fundamental drivers of demand, whatever the case may be. But when you look at the fundamentals of global trade and the markets, I don't know where that narrative will come from because it's all very bearish. But yeah, you know, there is a potential. I just don't know what it's going to come from. If you take a look at the weekly here, let's throw on the RSI. Make that a little bit brighter. The RSI is diverging slightly on the weekly time frame. So we have a weekly divergence here in the RSI. That's a positive sign. So we could rally. You know, the next kind of resistance would be here at around 13 in the NASDAQ. The NASDAQ's a very important chart for you to be following. So if Bitcoin is the way that you analyze, the altcoin market, meaning if Bitcoin's doing bad, the altcoins are doing bad, then the NASDAQ needs to be the chart that you're looking that tells you if Bitcoin's a good investment. So we are very closely correlated with what's going on in traditional finance. And when we look at traditional finance, the tech sector is the sector that crypto falls under. That's the category that crypto falls under. It's basically a tech stock on leverage is how a lot of the traditional financial market is looking at Bitcoin. So if we begin to rally in the NASDAQ, I would expect that we rally in Bitcoin. If we rally in Bitcoin, I would expect that we rally in altcoins. If we don't do that and we continue to break down, guess what? We're going to continue to break down. So going back to the question, is the bottom in? I think temporary, local bottom, potentially. But from a macro perspective, I think that we're setting up for a multi-year bear market. The worst bear market that's ever happened in crypto, period. Now, I do think there's potential for a bounce and a recovery. And if you play the recovery well, if you made mistakes in the bull market, you know, you could have a chance to erase some of those mistakes. But then that's it. And we're done for like a fucking decade. No all-time high ever again is what it'll feel like. And you'll convince yourself that crypto's dead. Which is why you should hit the books. Understand the fundamentals. If you don't know what you're buying, figure it out. Bitcoin's a very big deal. It's one of the biggest advances in internet infrastructure. Fuck money. Money's just the app. Okay, money is a simple application of a blockchain. It's a very effective application, but Bitcoin is so much more than a currency. It is how the internet becomes secure. Brilliant summary of all that psychology. I'm just learning of this. Yeah. Oh, for Amazon. Oh, okay. Do I still have it? that doesn't fit my narrative though. Accumulation is sideways. So, you know, we need to trade sideways. This, you basically feel like this is flat. The reason I brought it up is because of the context of the super cycle. So let's talk about, you know, let's break this down, because it's an appropriate observation. It's an appropriate observation. So this is the dot-com bubble. Let's break this down a little bit more. Okay, this is the dot-com bubble. I think, let me just yell into my mic a little bit more. I think we are completing our crypto bubble. We are completing our crypto.com bubble. So there will be rallies, there will be reactions, there will be cycles within a certain time parameter. But ultimately, I don't expect us to have Bitcoin at an all-time high for 3,600 days, which that's about 10 years. We'll call it 10 years. So from market cycle high to all-time high break, I expect Bitcoin to not trade at an all-time high with rallies and reactions within. So like this would have been considered a bull market. You can zoom into it and it would have been considered a bull market. Lots of bullish price action, correction, bull market, correction, bull market, correction. So there will be trading activity, but you're not going to have an all-time high break of the crypto market bubble high for 10 years. Now, this is my prediction, and it can absolutely not be true. It can absolutely not be true. This for me is hopeful thinking. This is like hopeful thinking. If you have the opportunity to accumulate Bitcoin between, let's say, $5,000 and $40,000 for the next 10 years, only for the next few years for it to go into a super cycle where you get to $2.5 million a coin, I'll take that. I will be happy to accumulate during that. And that's what I'm kind of hoping for. Because I think that, you know, there's a lot of people that seem to think that they have crypto figured out. And if you approach crypto from the point of view of a skeptic, meaning if you look at crypto with skepticism and you try to justify to yourself that it's ready for the world, you're lying to yourself. Crypto's not ready for jack shit. It is dial-up days. It is the worst user experience compared to what people are used to. Period. End of story. It is so easy, like just the fundamental fact that, you know, you can lose your private key. Just that alone, you can lose your private key. And if you lose your private key, you lose all your money. That's the only reason you need to say crypto is not ready for the world. Period. End of story. Until we fix that, until we figure out a way to store private keys in a way that is safe, secure, reliable, and easy, we are not ready for the super cycle. It's going to take time. We need a good amount of development here. And, you know, just the user experience with the wallets, having to copy paste. You know, we copy paste everything all the time. You'd be surprised how many people don't copy paste. Like I'll ask for, you know, a PIN number from somebody or I'll send a password to somebody who I'm sharing an account with for whatever the case may be. And they'll just be like, oh man, that's a pretty long and complex password. And I'll have to tell them, yeah, you just copy it and paste it. People are, you know, they're not where you think they are. We are not where we think we are in the adoption curve. So I personally would love to see this. I know that that's not the story that a lot of people want to buy into right now. But when I approach crypto from the point of view of a skeptic, this is the reality. I draw a lot of comparisons to the dot-com bubble and where the internet was in the late 90s, early 2000s, and it's just, that's where we are. We have a lot to do. This was also kind of the announcement where Jeff Bezos stated that he would be offering web servicing and web hosting. And everybody was like, what are you doing? Stick with what you know. Online store, online retail. Why are you selling web services? And now today, it turned out to be his biggest move, the biggest move. Amazon is the internet. Do you know that the number one product that Amazon sells is web servicing? Virtual machines, hosting services, that's their number one product. The internet is basically owned by Amazon. And I think that Bitcoin can basically be the security layer of the entire internet. So if you want a super cycle, you need a super bear market. That's the trade-off. You want a super cycle, you need a super bear market. Feel the same about NFTs adoption. It's perhaps one of the most important technologies coming for digital media, but it's just a dreadful user experience and very little development. Yeah, NFTs are a game changer. They are a game changer. But how you change the game with NFTs is the user experience, the users. NFTs are great for people who have crypto because they have a wallet. That's the big hurdle here, is getting wallets into the hands of users. Blockchain is pretty useless if you don't have a wallet. Most people will not set up a wallet. It's too foreign. Okay, you download an app. Okay, it's telling me to write down 12 words. What do I do with these words? How do I have to write them down on a piece of paper? Can't I just like make a note in my iPhone? No, you can't make a note in your iPhone. It has to be offline. Well, where do I put it? Well, you got to put it in a safe, and you got to make multiple copies, and you put one here and one there. And if you lose those 12 words, you lose all your money. Like, you're not getting a lot of people downloading wallets. They're just like, they get to the words, they get to the seed phrase, and they quit. NFTs are a fucking game changer, but they do nothing if the user doesn't have a wallet. They do nothing. Zero. Zilch. Zada. Nothing. So the tech is incredible, but without users, it's worthless. Why do I need a punk or an ape? Well, in the context of a CryptoPunk, it's kind of a piece of history. Who cares? Honestly, I don't care to get one. In the context of an ape, it allows access into a Discord where there are a lot of rich people who are very crypto savvy. The same thing it's the same with the CryptoPunks as well. So if you want to learn the best projects from the richest people in crypto, or the most active people who have shown that their ability to navigate the space in a valuable way, you want to be in their Discord, you need an ape. Do I think it's worth $100,000 or whatever it is right now? No, I don't. And I think there will be other stuff too. But that's not the point of NFTs. The point of NFTs is to cut down on marketing. So if I'm a producer of content, if I want to know who my dedicated fans are, not only do I know who they are, but I can just airdrop them shit. I don't need to waste money on anything. Like, a good example of the other end of the spectrum is like a flyer. So you print a huge stack of flyers and you post flyers all over the city with hopes that like 1% of people read it and actually call you for a service. It's a huge waste of money. There is so much money being wasted in marketing because of the inability to focus in on your actual clients. If you are a coffee shop and you have a punch pass for your cards, you get your 10th coffee free. Now, these are silly examples, but it's just giving you the power here. If somebody actually fills up the card, guess what? They're a dedicated client. They are somebody who comes to your establishment lots, and they spend a lot of money at your business. So it is most effective to spend marketing dollars to them. If you're going to spend money on marketing, market to them. And the easiest way for you to pick them out of a crowd is, hey, you have an NFT. Their term of it's all integrated into the point of sale. So if they're doing crypto transactions, paying for their coffee, after 20 coffees, you just automatically airdrop them an NFT. They don't even need to know about it. The NFT doesn't even need a picture. It's just a token identifying your dedicated clients. And then when you spend money on marketing, if business is slow and you want to drum up some business, you just airdrop coupons instantly, free, to your most valuable clients. You're going to get a ton of business. There are hundreds and hundreds of applications of where NFTs are going to be very valuable. Now, how many of those applications are going to be $250,000 pictures of monkeys? Sorry, pictures of apes? Not very many, but the applications are there. Again, it goes back to user base. All right, we're getting really, really off topic here, and I think I've just done a fundamental just splurt. But yeah, you know, cool beans. Let's recap here, and then I do got to get off. Okay, so Bitcoin, we're fighting against a trend here. If you're going long here, you have a high likelihood of getting stopped out. Bitcoin dominance, if we start to trend back up here, you're going to see the alts continue to bleed. So be on the lookout for that. But I think there is potential for a rally, especially when we look at specifically the S&P. So looking at the S&P 500, we're in the area of a potential bounce. If we bounce on the S&P, we're going to bounce on the NASDAQ. If we bounce on the NASDAQ, we're going to bounce on Bitcoin. If we bounce on Bitcoin, we're going to bounce on everything. So that's what you need to look for. Laser eyes on the S&P, laser eyes on the NASDAQ. And that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. If you would like to join the free Discord community, links are below. They're also pinned to the chat, so feel free to hop into the Discord. I only stream here twice a week, once on the Monday close and once on the Friday close. So yeah, if you want to hang out and have these thoughts and share charts and all of that fun jazz, then hop on into the Discord server. We do also have the VIP signals group where we train you on the Wyckoff method. We train you on the moving average method that we use alphanumerics, and we share our thoughts and trading ideas as well. 25% off any package that you choose in the links below. Use the coupon code BEAR. That is all the time I have. So thank you all for joining in, and please trade safe. It is a jungle out there. Peace.